Hello, everyone. Welcome back to WealthTube, where we turn your financial dreams into reality. Today, we're diving into the world of dividends, the unsung heroes of passive income. Ever wondered how you can make your money work for you? Dividend stocks are the key to unlocking consistent income. Today, we're counting down the 10 best dividend stocks to buy right now. These stocks aren't just about growth. They're about reliable income year after year. So, whether you're a seasoned investor or just getting started, stick around because you won't want to miss this. Now, let's get started. We think that the best dividend stocks aren't simply the highest yielding dividend stocks. We suggest that investors look beyond a stock's yield and instead choose stocks with durable dividends and buy those stocks when they're undervalued. Given ongoing economic uncertainty and stock market volatility, investors looking for the best dividend stocks might consider adding undervalued, quality dividend stocks to their portfolios. After all, quality companies have the financial stability to maintain their dividends during questionable economic periods, and price risk is reduced when investors can buy the stocks of these companies on the cheap. Now, let's see the 10 best dividend stocks to buy right now. 1. ExxonMobil. Morningstar rating, 4 stars. Morningstar Economic Moat rating, narrow. Morningstar Uncertainty rating, high. Trailing dividend yield, 3.32%. Industry, oil and gas integrated. ExxonMobil tops our list of the best dividend stocks to buy. In early May, the oil giant announced it closed its acquisition of Pioneer Natural Resources. According to Morningstar, the deal is sound, noting that the pickup is a lean into the firm's hydrocarbon-focused strategy, even though the firm remains committed to oil and gas more so than many of its peers. Morningstar also states that the firm's recent actions to reduce costs and capital spending should allow the company to meet its dividend payments. In fact, Exxon qualifies as a dividend aristocrat. Dividend aristocrats are those companies that have raised their dividends for 25 consecutive years or more. Morningstar think the stock is worth $138, and shares trade 18% below that. 2. Johnson & Johnson. Morningstar rating, 4 stars. Morningstar Economic Moat rating, wide. Morningstar Uncertainty rating, low. Trailing dividend yield, 3.28%. Industry, drug manufacturers, general. Johnson & Johnson is another dividend aristocrat on our list of cheap dividend stocks to invest in. The stock is trading about 11% below our fair value estimate of $164 per share. With a diverse revenue base, solid pipeline, and exceptional cash flow, the company earns a wide economic moat rating, according to Morningstar. Morningstar notes that the market is underestimating the company's solid pipeline and argues that the company's recently updated strategy to resolve talc litigation should resolve the risk hanging over the stock. Morningstar calls Johnson & Johnson's dividends and share repurchases about right. 3. Verizon Communications. Morningstar rating, 4 stars. Morningstar Economic Moat rating, narrow. Morningstar Uncertainty rating, medium. Trailing dividend yield, 6.42%. Industry, telecom services. Verizon is the highest yielding stock on our list of the best dividend stocks to buy, trading 24% below our fair value estimate of $54 per share. We think the market is overly focused on Verizon's challenges to add postpaid consumer wireless customers, according to Morningstar. Morningstar argues that the improving competitive balance in the wireless industry will allow the major U.S. carriers to boost profitability in the years ahead. Verizon's first quarter results showcased robust wireless revenue growth, thanks to recent price increases that drove higher sales without significantly higher customer defections. Morningstar observes that Verizon directed 60% of 2023's cash flows to the dividend. 4. Altria Group. Morningstar rating, 4 stars. Morningstar Economic Moat rating, wide. Morningstar Uncertainty rating, medium. Trailing dividend yield, 8.5%. Industry, tobacco. The highest yielding stock on this month's list of the best dividend stocks to buy, Altria is trading 21% below our fair value estimate of $58 per share. The leading tobacco maker in the United States, Altria is pursuing a multi-pronged approach to cigarette substitutes, according to Morningstar. The ability to consistently price above its rate of cigarette volume declines should ensure that the company can continue to increase its revenue, earnings, and Dividend. The company targets mid-single-digit dividend growth annually. Morningstar forecasts about 4.5% annual growth. 5. Comcast. Morningstar rating, 5 stars. Morningstar economic moat rating, wide. Morningstar uncertainty rating, medium. Trailing dividend yield, 3.17%. Industry, telecom services. Comcast stock trades 32% below our $56 fair value estimate. Morningstar argues that pricing power remains the most important factor driving Comcast's performance. Accepting modest customer losses while maintaining steady growth in revenue per customer has helped to offset uncertainty around the company's Peacock streaming service. Comcast instituted a dividend in 2008 and has increased its payout by 15% annually, on average. Morningstar notes that they think the balance sheet is sound and shareholder returns are generally appropriate. 6. Medtronic. Morningstar rating, 4 stars. Morningstar economic moat rating, narrow. Morningstar uncertainty rating, medium. Trailing dividend yield, 3.57%. Industry, medical devices. Medtronic stock trades 31% below our $112 fair value estimate. The largest pure-play medical device maker is a key partner for its hospital customers, thanks to its diversified product portfolio aimed at a wide range of chronic diseases, according to Morningstar. The company aims to return a minimum of 50% of its annual free cash flow to shareholders, but has been in the 60% to 70% range in recent years. Medtronic has raised its dividend for 46 consecutive years, earning it Dividend Aristocrat status. 7. Duke Energy. Morningstar rating, 4 stars. Morningstar economic moat rating, narrow. Morningstar uncertainty rating, low. Trailing dividend yield, 4.08%. Industry, utilities, regulated electric. Duke Energy stock is trading 10% below our $112 fair value estimate. One of the largest regulated utilities in the United States, Duke has carved out a narrow economic moat because of the constructive regulatory environments in which much of its regulated business operates and better-than-average economic fundamentals in its key regions, according to Morningstar. The company's balance sheet is strong, and its dividend policy to pay out 65% to 75% of earnings is appropriate. 8. Starbucks. Morningstar rating, 4 stars. Morningstar economic moat rating, wide. Morningstar uncertainty rating, medium. Trailing dividend yield, 2.95%. Industry, restaurants. Starbucks is a newcomer to our list of the best dividend stocks to buy. One of the most recognizable restaurant brands in the world, Starbucks has carved out a wide economic moat, according to Morningstar. The company's balance sheet is sound. Starbucks generates strong free cash flow, and management targets a 50% dividend payout ratio longer term. Starbucks stock trades 21% below our fair value estimate of $95 per share. 9. PNC Financial Services. Morningstar rating, 4 stars. Morningstar economic moat rating, narrow. Morningstar uncertainty rating, medium. Trailing dividend yield, 3.96%. Industry, banks, regional. PNC Financial Services is the only bank on our list of the best dividend stocks to buy. One of the larger regional banks in the U.S., PNC has a fairly diversified fee base, according to Morningstar. Morningstar notes that they think its balance sheet is well-positioned for the current interest rate cycle. Morningstar also comments that PNC's capital return strategy has been appropriate from their perspective. PNC stock trades 11% below Morningstar's fair value estimate of $175 per share. 10. Kinder Morgan. Morningstar rating, 4 stars. Morningstar economic moat rating, narrow. Morningstar uncertainty rating, medium. Trailing dividend yield, 5.71%. Industry, oil and gas midstream. Kinder Morgan rounds out our list of the best dividend stocks to buy. The firm's assets span natural gas liquids, oil, and liquefied natural gas, but we think the company's U.S. gas pipeline business is most impressive, according to Morningstar. Morningstar also highlights that Kinder Morgan will enjoy growth opportunities from artificial intelligence and data center demand. Morningstar anticipates a 2% to 3% dividend growth rate ahead. Morningstar thinks the stock is worth $22, and shares trade 10% below that. And there you have it, folks. The 10 best dividend stocks to buy right now. Remember, building a solid portfolio takes time and research, but these stocks can be a great addition to your strategy. If you found this video helpful, make sure to give it a thumbs up and share it with your fellow investors. Your support helps us keep bringing you the best tips and insights in the world of finance. Join the WealthTube community by subscribing and hitting that notification bell so you never miss an update. Got questions or suggestions for future videos? Drop them in the comments below. We love hearing from you. Until next time, happy investing and stay wealthy.